Hey, good afternoon, everybody. Well, the housing market seems to be basically invincible to lower home prices. And that's despite higher mortgage rates and really record unaffordability. It just seems like the housing market, it just feels invincible. So, really, today, what we're going to talk about is what's really happening, though, in the housing market behind the scenes. And to do that, I'm going to show you and review the latest Redfin housing market data. If you're new to this channel, welcome to the Housing Nerd. And you may be here because you are a buyer, maybe you are a seller, a home seller, maybe you're an investor. Maybe you're a realtor. Maybe you are uh, just somebody on the sideline hoping to get into the real estate game. Either way, and whatever the case may be, thank you for joining me today. I'm the housing nerd, but my name is Jason Ferrier. I'm a realtor. I'm an investor just outside of Columbus, Ohio. And yeah, I'm excited to show you what's been going on with the housing market. Every week I do a Redfin update. I usually do those on Thursdays, but Thursday was Thanksgiving, couldn't get to it. And Redfin finally published the data. So I thought I would jump on today, Monday, get it done. And we'll do another update on Thursday when they publish their new data set. So here's the agenda. We are going to review their article briefly, the Redfin article that they put out every week. And then we're going to look at the national data. So we're going to look at the latest housing market data from a national level. And then we're going to drop down to a metro level. And so if you have a metro that you want me to analyze, a city, a county that you want me to analyze on the lives, just put it in the comments below and I'm happy to do it. So today, we are going to review several metros, including I've got obviously Columbus, Cincinnati, Cleveland, because I'm in Ohio. So I always hit those. Then I've got Portland, Oregon. I have Delray Beach, Florida. I've got Carson City, Nevada. Those are two areas that, two smaller areas, I guess, that I don't typically analyze. And then I've got Boise, Idaho. Those are all requests from you. So thank you for those requests. If you did request those, thank you. And if you have one you want me to hit on, go ahead and put it in the comments below. But yeah, I appreciate you joining me. So let's get started. And obviously, like, subscribe, comment. I want to know what's going on in your neck of the woods with the housing market. And tell me, what do you think of the invincible housing market? Do you think it's invincible or does it just seem that way? But I'd love to know what you think. And again, thanks for joining me. All right, let's get started on the Redfin article first. Okay, so here's the Redfin article. Now, something to keep in mind with all of this is that they're looking at data um, year over year normally, and so Thanksgiving this year fell later than normal. So they're actually comparing uh, data that didn't have Thanksgiving in it to data that did have Thanksgiving last year. And so there's going to be some, and they mention it, but there's going to be some, I guess, anomalies there, or, I'm really not sure if these trends are going to continue. But what I've seen in this data is pretty shocking, especially for this time of year. So here we go. All right. Pending home sales rise after post election surge in home tours. All right. So pending sales posted their biggest year over year increase this week, partly because the boom in early stage home buying demand we just saw after the election is translating to sales, and partly because we're comparing to a period in 2023 that included Thanksgiving. U.S. pending home sales rose 12.1% year over year during the 4 weeks ending November 24th, the biggest increase since May of 2021. One reason for the outsized increase is the early stage home buying demand, including home tours, boomed in the 2 weeks following the presidential election. But another notable reason is that we're comparing to a period of 2023 that included Thanksgiving, a time of year when home sales are typically very slow. So They're very quick to point out, rightly so, that they're comparing against Thanksgiving of last year. So the fact that we're up 12% year over year in pending home sales, and pending sales are basically, a house that goes into contract. So they're very quick to point out that, hey, just because we're up 12% may not be a trend because of Thanksgiving. They're also saying that the election, the post election frenzy, I guess, or unlocking of the demand increased home purchase applications or I'm sorry, mortgage purchase applications. And that has translated now into actually pending sales. All right. So they point out, which is good. We'll know in the next few weeks whether there's an increase in pending sales as a Thanksgiving mirage or a sign of sustained growth in the housing market. I guess we'll see, right? Mortgage purchase applications are up 12% week over week, though home tours and other early stage signals have tapered off. Redfin's Home Buyer Demand Index, a measure of tours and other buying services from Redfin agents, fell to its lowest level in over 2 months during the week ending November 24th, though it's up 7% year over year. The recent dip in early stage demand follows 2 weeks of big upswings. The demand index hit its highest level in nearly a year and a half mid-November. So Redfin has a proprietary way they track home buying demand, and they're saying, hey, mortgage purchase applications are up 12% week over week. That's pretty big, right? If you think about, that really doesn't have anything to do with Thanksgiving. So you're looking at 1 week, then you move to the next week, they're up 12%. So 12% more people actually applying for mortgages. I'll continue here. On the selling side, new listings are up 10% year over year, the biggest increase since April. That's also due partly to the fact that Thanksgiving fell into last year's comparable period. Like the surge in pending sales, we'll know more soon about whether the improvement in new listings is here to stay. So yeah, new listings ticked up year over year, but as you'll see in a second, new listings are still really not impressive. They're just not. And that means that inventory continues to suffer overall in the nation. It just does. All right. So now we look at the leading indicators. These are like the indicators of home buying demand and activity that Redfin puts out there. So daily average 30-year fixed mortgage rate, 6.95% as of November 26. That's down from 7.08% 1 week earlier. I looked at Mortgage News Daily today, but I forgot for some reason to write it down. 6.91. So right now, if you go to Mortgage News Daily, you can see we're at 6.91% for a 30-year fixed mortgage. So they said it was 6.95. So it's a little lower right now. It's actually come down since in the last couple of weeks, come down from like 7.15 to now 6.91. Weekly average 30-year fixed mortgage rate. So the weekly average is 6.81. That's the highest level, though, since July. Mortgage rates have been like home prices, just stubborn like a mule. Mortgage purchase applications, seasonally adjusted, up 12% from a week earlier, but up 52% year over year. Again, you got Thanksgiving in there last year. This year, Thanksgiving fell in a different week, so not a great comparison. But it'll be interesting to see if more people, now that the election's over, more people are applying for mortgages. Redfin Home Buyer Demand Index down 5% from a month earlier, up 7% year over year. But remember, we have Thanksgiving to compare it to. Touring activity down 8% from the start of the year. At this time last year, it was down 42% last year. So, I mean, if you think about 2023 and look at that, their touring activity, number of people seeing homes, was down 42% from the beginning of 2023 to this time last year. I mean, that's a lot. Now we're only down 8% since the start of the year. So is that good? I don't know. I guess more people are looking at homes. Google searches for homes for sale unchanged from a month earlier as of November 25th. So people looking for homes just as much as they were last month and this time last year, looking for homes on Google. Actually, like Googling home for sale. All right. Now we're going to look at the key housing market data for the top 400 metros. Before I get to that, let me just check the comments real quick. Hey, John, Palm Coast, Florida, Daytona Beach Metro. Yep, I'll do that one. So, yeah, I'll do that in the metro section. But yeah, thanks for that. Are you the one that requested Delray Beach? Because that's kind of in that area, isn't it? But yeah, let me know there. Thanks, John. What's up, Raymond? Good afternoon to you too. Thanks for joining me. You guys got to check out Raymond's channel. Raymond has some he's a content machine. He puts out a video, I think, almost every day. And just a normal dude, lives in Ohio, knows about real estate and a lot of other topics as well, and especially about how to save money. So Raymond's a great channel to check out. Raymond Thoughts in Mind. All right. Thanks, Raymond. Okay, so let's look at these stats. Median sale price, 386,625. Biggest increases since September 2022. Year-over-year change of 7%. That median price, that's why I put invincible in the thumbnail of this video, because it feels like the price, median sale price, is like not moving at all. It's not going up, which I guess is good if you're waiting for a deal, but it's not going down. That's for sure. And it would take like a cataclysmic event to have the median sale price fall underneath 2023. It looks like we're going to end 2024 higher than 2023. Just unreal, right? Despite everything that's been going on in the economy, the election, interest rates, the median sale price just keeps laughing and going forward. Median asking price, 385,000. Look at that. Median asking price is now lower than median sale price. One would think eventually median sale price will come down because median asking price is coming down. I don't know. We'll see. Median monthly mortgage payment, $2,578 at a 6.81% mortgage. So it's up 2% year over year. Now a mortgage actually costs you more now, 2% more than it did this time last year on average. If you take median. So if you take the median home price and now you look at an interest rate of 6.81%, that's where you get the payment. Pending sales, 71,773. That's an increase of 12%. That's the biggest increase in pending sales since May 2021. But they're comparing against Thanksgiving. So when you think about this, you've got 71,000, call it 72,000 homes going into contract during that 4-week period that they analyze. New listings, 74,118. So you've got 74,000 listings coming on market. You've got 72,000 pending sales. There's only a difference there of 2,000 units. So theoretically, if those pending sales close, now none of them, they all don't close, but they could, it's possible they all close, but they probably won't. But pretend they all do, you're only really gaining less than 2,000 units, right? Or about 2,000 units. So it's like you're not really adding a lot of inventory to active listings. And by the way, there are 3 things that you should definitely pay attention to in your local housing market to find out what's happening locally. And there are 3 things that I pay attention to as an investor and a realtor. And that is sold and pending sales is one of them, one of the key things to look at. So you've got pending sales on this screen, 71,000 or 72,000. Then you've got new listings, 74,000. So I look at pending, sold is kind of one thing together because that's how, that's the number of homes coming off the market. Then I look at new listings and active listings. That's my second thing I look at. And that's the inventory level. So if you're not adding a ton of new listings, you're not going to have uh, probably price decline unless you have, unless pending sales drop more, which they're at really one of the lowest levels right now in a couple decades. So the point of that is new listings have to increase exponentially in order for uh, us to see distress in the housing market. And you'll see distress in the housing market first in new listings. Like that's where you're going to see it because people will put their homes on the market and they become new listings. If there was distress and people were like, man, I got to sell these houses today. If investors were unloading homes hand over fist, you would see it hit the new listings and they would be a lot higher, like 100,000 in 4 weeks. That's what we need. 120,000, 150,000 in 4 weeks. Right now, only 74,000. They're not going to do it. So, no surprise here. Active listings, 1,010,000. So, they're saying that's the smallest increase since March. So again, that's something that you have to pay attention to is the active listings. And they're not growing right now. They're like stagnant, completely stagnant. And you'll see that on the chart in a minute. Months of supply, 3.9 months of supply. That's actually dropping now. So that was increasing, but now that's coming down because we're not adding enough inventory. Even though our sales are pathetic, the number of homes actually selling is not a lot compared to historical averages. Inventory is so poor and new listings are so bad that the months of supply is not increasing. Share of homes off the market in 2 weeks or less, 29.3%. So 29.3% of all listings are off the market in 2 weeks or less. Median days on market, 42. This is the third thing I would pay attention to in your housing market is median days on market. So right now we're up 7 days year over year. Right now it's taking 7 more days for homes to sell on average compared to last year. So homes are sitting longer, 42 days compared to 35 days. So if you see days on market increase in your area and you see new listings increase and you see active inventory increase and you look at pending sales and sold listings and those aren't increasing, one can assume that the market is slowing down from a buying standpoint. Inventory is increasing. You'll probably see price declines. But if you see median days on market slowing down, if you see median days on market dropping, you see, active listings and inventory dropping and solds and pendings increasing, the chances of a price decline are slim. Share of homes sold above list price, 25%, down from 27%. So people are still, there's 25% of the homes sold are still going above list. So, fun fact, boots on the ground, not fantasy land type stuff. As a realtor, I help people buy and sell homes, obviously. Well, I'm helping people find and buy a home right now, several different buyers. And I can tell you that there are definitely homes going over asking, multiple offers, and they are going in like 2 or 3 days. That's still happening. It is. It's not like it was in 2021, but I've seen maybe a handful of them over the last week that we've gone and toured, and they go in a couple days because they're in great areas. They're dialed in, nothing's wrong with the house, and they're priced well. And they're priced accurately. You're probably going to see multiple offers. Average sale to list price ratio, 98.6. So people are getting 1.4% discount on average on homes. So it's not like it was, 2022 where people were paying 105% on average. That's good. We don't want people paying over list price. That's not good to do that, right? All right, now we do metro level highlights. Now, this isn't the metro analysis part yet. This is just Redfin's overview, and they take the top 50 most populous US metros and look at the top line stats. They kind of give us a flavor of the winners and losers of the top 50 metros. So, median sale price. Where did sale prices grow the most in the US? Philadelphia, Newark, New Jersey, Miami, Cleveland, Detroit. Where did they shrink the most? Where did prices fall the most? Tampa, Florida is the only metro that had a year-over-year decline in home prices. Let that sink in. Only one out of the top 50. That means 49 of the top 50 metros saw year-over-year price increases, or a year-over-year price increase, I guess you could call it. Pending sales. Where homes are going into contract the fastest. San Jose, New York, San Francisco, Dallas, Las Vegas. I mean, like, look at San Jose, up 23.7% year over year in pending sales. So a lot more people, 23% more people are buying homes than they were this time last year. Remember, we are comparing it against Thanksgiving, though. So that is a something to note. Miami, West Palm Beach, and Fort Lauderdale all posted the largest decline in pending sales, where they're dropping the most. People putting homes in contract. New listings. Where are the most new listings hitting the market? Or rather, where are new listings growing the most? Not necessarily how many, but where they're growing the most. San Francisco, Washington, D.C., Seattle, New York, Baltimore. I mean, I mean, you would expect to see more inventory, more active listings in these locations now. Austin, San Antonio, Atlanta, and Orlando is where they dropped the most with new listings. They declined in 4 metros, and those are the 4. So that means what? 46 of the top 50 US metros actually had increases in new listings. That's good if you want to see more active listings. That's good. Remember, comparing against Thanksgiving, though. So hard to exactly know until the stuff shakes out over the next few weeks. Okay, now we look at the charts that Redfin puts out here. Then we'll go into the metros in a deeper level that you all requested. All right, median sale price. So look at this thing. I mean, it's not crashing. The gap's getting wider. It's kind of gone sideways for the last few weeks. Hasn't gone up crazy, but it again hasn't crashed either. So a lot of people thought the median sale price would end under 2023, but it's not. So the folks that are waiting for home prices to decline, like nationwide to decline, every market's different. They may be waiting a long time to see a year-over-year price decline. It hasn't happened. It just hasn't happened, right? All right. Median asking price. How much people are asking for homes? That's going down, right? It always does seasonality, you'd think. I mean, look at the chart. It almost looks the same every year as far as the structure of it, I guess. Up 5.4% year over year, but now this is less than the sale price. That tells me there are homes listed already on the market that, were listed way high, I would assume. And then people are buying those homes. That's keeping the median sale price up. But then as people start listing homes at maybe a more realistic price, the asking price drops. Eventually, hopefully, the sale price will drop. We'll see. Home buyer housing payments, 2.3% up year over year. Again, costs more now to buy a home regarding the payments than it did last year. That's nuts. That's nuts. Pending sales up 12% year over year. So you can see, right? Pending sales aren't amazing. They're still down in the dirt, especially compared to 2021. Look at that. This is what I mean. If you go back, look at 2021. We had at this time of year 105,000 pending sales at this time in 2021. Now we've got 71,000, 72,000. Big difference, right? 30,000 35,000 units. That's a big difference. Same thing here. Look at new listings. Again, if you want to track what's happening in your local housing market and know more than most realtors out there, know more than most economists, certainly know more than most homeowners and home and buyers and sellers and competition. Pay attention to new listings. Where are new listings headed where you live? Where are they going? Are they going up? Are they going down? You adding a lot of new listings? So this is at 74,000, but you can see again, it's in the toilet. It just is, and it hasn't been good for several years. I mean, look, you can see 2023, 2022. 2023 is in the orange, 2022 is in the red. Then you've got this blue, green, whatever color that is. That's not much higher than it is right now. So the point is, new listings have been suffering for years. And because of that, active listings haven't really grown that much. We're still under pre-pandemic levels with active inventory. We still haven't recovered all the way, if you go all the way back to 2019. We had more active listings then than we do now. People just don't want to list their homes for sale overall. Active listings, here you go. See what I mean? Look at that. Eventually, you could see active listings were like going up, up, up. Just straight up. Not straight up, but rapidly increasing. Then they kind of plateaued. Now they're dropping. Now they always drop in this, in the winter because people just don't want to move in the winter, generally speaking. But now you can see now they're really starting to plummet. Only up 12% year over year. At one point, I think they were up like 50% year over year, 40% year over year. Not anymore. Not anymore. 3.9 months of supply on the market. That's how fast we could sell through our current inventory if we didn't add any more units. 3.9 months. And you could see now that's starting to cut underneath 2023 and 2022, meaning just less supply on the market given the pace of demand. 29% of pending sales under contract within 2 weeks. That's a 4-year low still. So homes are sitting longer, no doubt, but the good homes are moving. Homes sold in a median of 42 days. See, they are sitting longer. Look back in 2021 at this time. We were like 27 days. Man, 27 days. Now, 42 days. So buyers can take their time more so than they could last several years. All right, 25% of homes sold above final list price. Yeah, you don't like to see anybody pay more than list price for the home, but 25%, a quarter of the homes are still going over list price. But look back in 2021 and 2022. Look at that. Over 50% of homes sold above list price. 50%. You could just throw a home on the market. I remember listing homes for fellow investors who flipped homes or were selling rentals. And even I had some flips, and people would want to buy the home before it even hit the market, right? It's kind of annoying, actually. To me now, it's a more stable market. At least there's some time before it just goes into contract. Average home sold for 98.6% of final list price. Look at that. In 2022, it was 102.5%. The average home was selling above list price. Now, a little under list price. That's good. I am seeing more price drops in my local area here outside of Columbus. I'm seeing more price drops. I'm seeing people adjust prices and be willing to adjust prices more. And I am starting to see people lower their price because they know that, okay, after a month on the market, nobody's coming to buy it, no offers, probably need to drop the price. So that's good. More of a normal market. All right, Redfin Home Buyer Demand Index up 7% year over year. So I guess their little way of calculating demand says that it's up more than last year, but now it's starting to head down. I don't know. I don't pay too much attention to that thing. All right, let's get into the metro data now. Thanks for your patience. So you can come here to the Redfin data center and do the same thing I'm doing, and you can search by metro or county. And it depends on what area it is. Some of the metros, I mean, they go by the MLS. So Columbus, for instance, covers all the counties around Franklin County, which is where Columbus is. Before we get started here, let me just click on some comments. What's up, Raymond? Jason, where would you be looking right now? Lots of feedback in my comments about how nothing affordable anywhere. I always try to point in the right direction. Where would you be looking right now? So one thing I would do is I would if I was looking for an affordable house to live in or invest in, I would be driving the streets looking for distressed properties or properties that look like they need help or look abandoned. Nothing, and even if it's not obviously something that's not on market. So I would be driving around looking for houses in areas I want to live in or invest in. I'd write down those addresses. I'd go home, do some research on the owners and their mailing address, and then send them a letter and ask them if they want to sell. That's really how I buy a lot of my properties. Number one, you've driven by the property, so you kind of know what's going on with it. You know the area. It's very targeted. It's very direct. You may have to send a lot of letters, but eventually somebody's going to say yes. That's how I would do it. I would also look for properties that have expired or are canceled. So have your realtor pull anything that's been expired in your target area, because those folks weren't able to sell in the MLS. Maybe they're open to a lower offer now. The other thing I would do is look for people that are behind in their property taxes. So you can go to your local county, and depending on the county you live in and the state you live in, you can go to your county level and grab a list of delinquent property taxes of people that, owners that are behind. And it's not a perfect list, but like in Franklin County, where Columbus is, the list is like 50,000 names. And you take that list and then look at the areas you want to buy in, filter the list for those areas, look for the type of house you want to buy. So because the county data will have that, the type of house it is. And then I would go drive by those houses and note the ones that look like maybe they're abandoned or forgotten about. They need new roofs, whatever. And maybe even bounce them off the expired listings. And then you'll have kind of a targeted list to go after. So that's what I would do. That's where I would look if I had to start today. John, oh, awesome. You own a 3-unit in Newark? Is that Newark, Ohio? Is that what you're saying? Sweet. If that's true. If not, Newark, New Jersey's, that's cool too. All right, let's do this metro level data review. So again, you can come here to the data center, jump in here, and oh, I'm going to show this. Oh, Newark, New Jersey. All right. I got excited for a second. Newark, Ohio. It's like a town of like 30,000 people. I was like, wow, I can't believe you invest here. That's cool though. Why do you like Newark? I want to know. And I want to know about your 3-unit. Is it like old? Is it like an old building, like turn of the century, like 1900 turn of the century? Or is it like newer? Does it cash flow? Do you own a lot of them? Tell us what's going on there, John. Okay, so let's jump into the Columbus data. All right, so I always start with new listings on these metros. So I'll do new listings, I'll do active listings, how many houses are actually on the market. Then I do pending sales, and then median sale price as well. Sometimes I'll do median days on market to see how long houses are sitting on the market. This data, though, this is definitely an not a 50,000 foot view, but more like a 10,000 foot view. But you want to get more detailed than this, depending on where you live. This can kind of just give you a flavor of what's happening, from a 10,000 foot view in your market. All right, so new listings right now in Columbus, we're at 4% increase year over year for new listings. It's just like everywhere else. People just don't want to list their homes. I will say there are more options out there for home buyers right now, but it's not extraordinary by any means. All right, let's look at active listings for Columbus. Active listings only up 16% now year over year. It's at a 4-year high. It is for active listings, but we in the Columbus metro area and the surrounding counties, we're still struggling with inventory, especially affordable inventory. So hopefully that improves. Hasn't yet. Pending sales. How many sales are going into contract in Columbus? We're up 7% year over year. A little busier. Not much busier, though. Nothing really to write home about there. Just still a slow market in Columbus from a buying and selling standpoint. Let's do median sale price in Columbus. Median sale price, 340 grand. That's actually dropped a little bit over the last few weeks. It usually does in the fall, but we're up 8% year over year. Now, my call at the beginning of the year was we would be at between 5 and 10% increase year over year in median sale price in Columbus. We're at 348% increase year over year. I wonder if Ryan Day is going to list his home. You think he will? Think Ryan Day will actually put his home on the market here? I doubt it. I don't think he'll be fired, but you never know. I'm sure he already has a realtor, though. It's probably not worth my call. All right. We did Columbus. Now let's do Cleveland. Cleveland, Ohio. New listings in Cleveland up 9.9% year over year. It's starting to swing back up a little bit. Okay. Be nice to see some more listings there. Active listings. This is ridiculous. I mean, active listings now, year over year, only up 0.85%. And it's headed down. So pending sales must be doing something, you'd think. A slight tick in pending sales, up 6.6% year over year in Cleveland. All right, let's do median sale price in Cleveland. Look at that change. Wow. All at one point, $219,000. Now $230,000, up 14% year over year. Wow. So, yeah, you can still buy a home in the United States for $230,000 in Cleveland, Ohio. I know a lot of people that invest in Cleveland. I don't. I like to invest closer to home, but Cleveland seems like an affordable market to invest in, maybe. I'm sure the locals don't feel that way, but investors feel that way. All right. So that's Cleveland. Let's do Cincinnati. Cincinnati, Ohio. Kind of down by Raymond in a way. Cincinnati. 14% increase in new listings. But again, it's still headed down, because of seasonality maybe, but at least you have more than you did last year. Active listings. This is high in Cincinnati. At least it has been. Yeah, 48% increase or 48% more than last year in active listings. So a lot more homes for sale than last year. A lot more homes. I'd love to know from somebody in Cincinnati if they're seeing like homes all over the place for sale. Are they affordable homes? Are they expensive homes? What are they? It'd be great to have a breakdown. If Redfin could do that, that'd be ultimate. A breakdown by price category. Like how many homes are for sale that are over 500 grand, under 500 grand, something like that. It'd give us some more data to go on. Pending sales in Cincinnati. 18.5 8.5% more than last year. So definitely some more movement in Cincinnati in pending sales, more activity in pending sales. Homes are selling and moving more so than other spots in Ohio. All right. Median price, 288 grand in Cincinnati. They peaked back at 306. Now 8%, or I'm sorry, 5% increase year over year, $288,000. All right, that's Ohio. That's Ohio. All right, let's do the next on the list, which is Portland, Oregon. Portland, Oregon. New listings for Portland, Oregon. I mean, it's almost the same as last year and what is that, 2022. 2% increase in new listings, hardly any new listings at all. Again, that's where you're going to see the distress. If you hear somebody on YouTube talk about like massive distress coming to the housing market, like we're doomed, like extinction level event coming, it has to be in the new listings. You've got to see that for us to have any type of price decline. Active listings, 5.75% more than last year. That's it. Hard to have a lot of price declines when you only have 5% more inventory than last year. It's still a 4-year high, but it's headed down. So what's up with pending sales now? Let's do pending sales. Pending sales up 11.5%. People are actually buying. People are actually buying in Portland. Huh. Okay. Median sale price in Portland, 541 grand. It's starting to head down, and it was actually, let's see, where did it peak? 570 grand is the peak? No, that's not right. Back in 2022, they peaked 574. And now they're at 541. So they're definitely coming down from the peak. There's no doubt. It'll be interesting to see what happens with median sale price, given the fact that there's not a lot of inventory compared to last year. Only up 3% year over year, but they're still up. But they are off of peak. They are. A lot of areas peaked in 2022. Ohio didn't. Ohio peaked this year, like Columbus peaked this year. Cincinnati peaked this year, and so did Cleveland. But Portland, good example of it peaking. Sale prices actually peaked 2022. But then you had the interest rate increase, and a lot of people decided to list their home then in like a frenzy, and prices came down in a lot of areas. All right. That's Portland. Now, next is Delray Beach. Okay, so somebody asked for Delray Beach, Florida, but that's not a metro that Redfin covers. So I'm going to go to the county level and go to Palm Bay County. Or Palm Beach County, I guess it is. Palm Beach County. So correct me if I'm wrong, whoever asked for Delray Beach, it's covered it's actually in Palm Beach County. So that's what I'm analyzing. Hope that works. If it didn't, I apologize. I'll try again later. All right, 7% increase in new listings. So they do have more new listings in Palm Beach County, Florida. I keep wanting to say Palm Bay. Active listings in Palm Beach. Look at that increase. They're up 27% in inventory. It's going up right now. Look at that. Different than a lot of other areas that are seeing a decline in active listings as we hit winter. It's going up. Now, someone told me that this is the buying season in Florida. I don't know if that's true or not. Be interesting to know if that's the case. But yeah. Active listings going up in Palm Beach County, Florida. Let's look at pending sales in Palm Beach. down 4.9% year over year. So maybe that's why inventory is increasing, right? You've got, and then again, this is why you have to watch this in your local market, folks, if you want to know what's happening with the housing market where you live. You've got new listings. I'm back to new listings now. You got new listings up 7%. Then you can see the active listings starting to increase, right? And you can see pending sales still down 4.9% year over year. So, I mean, your pending sales are low. Your new listings are, you have some more new listings. You're going to see active listings decline. I'm sorry, you can see active listings increase. So active listings are going to go up because, the inventory is not coming off the shelf. Shelf gets full. Just like a grocery store, same thing. All right, let's do median sale price. $491,000. This is amazing. There are areas of Florida that are hurting from not only the hurricanes, but from the associations. I'm sorry, the assessments and the association dues on condos, property taxes, and insurance. I mean, we hear that over and over and over again. But like areas like this county's big in Florida. The price decline isn't there. I mean, it's just not. Unless it's hidden somewhere and I'm not seeing it, I'm just not picking up on it. Not picking up what they're laying down with the price crashes in Florida yet. But I know I could be wrong. I'm just looking at the Redfin data here. All right, so hopefully that helps the person that asked for Delray Beach. Right. I'm going to do Palm. What's up, Mrs. Plex? How are you doing? Palm Coast is in Flagler County, Florida. Okay, I'll do that right now. Do you live in Florida, John? Is that where you live and you invest in New Jersey? Or do you live in New Jersey? Flagler County. That's okay. We got it. Sweet. Let's do new listings in Flagler County. Down 5.2% for the 4 weeks in Flagler County for new listings. Let's do active listings. Active listings year over year, 12%, 13%, we'll call it, up. So it's kind of held steady most of the year, right? I mean, you started way back here, 1,300 active listings. Now you've got 1,500 active listings. So you do have more, but it's not like it's skyrocketing upwards. So, let's do pending sales. What's up with that? Pending sales down 4.7%. So not as many people actually buying homes, it doesn't look like. Now let's do median sale price in Flagler County. 0% increase. Like you're flat from last year, $359,000. Your peak was this year. Look at that. Way back in, January, 404,000 was the peak. Maybe some really big expensive homes sold. I mean, you only have 1,500 active listings. Is that right? Yeah, 1,500 active listings. So we only have 1,500 active listings. A couple big sales will probably swing the median sale price. I wonder if that's what happened. You have to tell me. But that was, 404,000 was the peak. Now you're at 359,000. I mean, it's pretty up and down all year, given probably, again, the volume is so low that a couple of big sales will swing that up and down. But you're not at an all-time high right now, and you haven't been most of the year in prices. But let's go back to your inventory quickly. Your inventory is dropping. It's going down in inventory. So I don't know. I'm curious. Are there a lot of homes you're seeing for sale? Are they expensive? Are they affordable? What's the story? I live in New Jersey looking to retire in Florida. Okay. Got it. Well, it looks like inventory's dropping there, but it's not like it's through the basement. But you are at a 4-year high in inventory. So maybe there's more selection to pick from. I mean, if you go back to 2023, you only had 1,300 homes this time for sale. 2022, there were only 1,100. 2021, you had 1,000 homes for sale. So you have 500 more homes for sale than you did this time in 2021. Seems like a lot when you only have 1,500 listings. That's a pretty big jump, right? A third. So maybe some more options there to look at. I'm curious, John. You say you're looking to retire in Florida. Are you looking for a condo? Are you looking for a single family house? And really, my question is really, what about taxes and insurance? Are you worried about taxes and insurance, or is it something that you're like, not a big deal? Property taxes have gone up a lot. Insurance is high, but you're just going to handle it. So, just curious from somebody looking to retire there from like the Northeast. All right. Hopefully that helped, John. That's Flagler County, Florida. All right. Now I'm going to do Carson City, Nevada, which is actually Ormsby County, Nevada. Oh, I thought it was on here. Let me do this. Did I have the wrong one? Oh, Carson City, Nevada. I've got the Metro. My bad. All right. So Carson City, Nevada. Somebody requested this one. Again, if you have a Metro you want me to analyze, drop it below. Even if we did it on a previous live, no big deal. It helps to look at them again and again and again. 9%, 9.9% increase in new listings in Carson City, Nevada. So you had 13 new listings. Wow, that doesn't seem like a lot at all. Active listings going down. Usually does this time of year, but you're headed down quickly. Only up 3.3% since last year. Not a lot of pending sales not a lot of active listings compared to last year. Pending sales up 23% compared to last year. So a little more people were actually buying and selling more, I guess, than they were last year in Carson City, Nevada. Median sale price $521,000. Wow. I can't believe it's that expensive there. I wouldn't think that. It's got to be higher than Las Vegas, right? It's got to be. It's got to be higher than Las Vegas. $521,000 for Carson City, Nevada. What's going on there? Up 9% year over year. It's gone up and down like a yo-yo all year long, though. The peak was actually in 2023 last year at 610,000. But the sample size is small, so that's going to make that price go woo, 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 up and down, up and down. So doesn't look like prices are crashing in Carson City. It looks like inventory is headed down right now. But prices don't look like they're crashing, and they're not going up, in a straightward line either. Okay, that's Carson City, Nevada. I've got Boise, Idaho next. Boise City, Idaho. Boise is like one of those areas that really boomed during the pandemic, right? People all thought, "Hey, I got to buy a second home in Boise, Idaho," so they did, and then I think they sold them or they tried to sell them. So new listings. Well, first look back at the peak of new listings back here in 2022 in Boise City, 567 new listings in a 4-week period. Then you go down to now and you have 204 new listings. That's what I'm saying. They're only up 2% year over year in new listings. It's not growing inventory probably. What's up with active listings in Boise City? Down 22, almost 23% in Boise City. 23% in Boise City. Unreal. Down. I mean, just a ton. I mean, got a lot less new listings and active listings. No, a lot less active listings, only down slightly in new. So active listings are down big time. Like, holy cow. I didn't expect to see that. Let's do pending sales in Boise City. Pending sales. This this chart here is strange. It has this at the end of the year and the beginning of the year. Not sure what's up with that. That rise in like 1 week. But pending sales up 23%. So people are buying. Does look like they're buying more than they did last year. I wonder what happened with median sale price. Median sale price, $476,000, down 1% year over year. Basically right in line with 2023, 2021, 2022, right in line with all those years. And then look at the peak though. And this is one of those ones that peaked in 2022, $546,000 in Boise. Boise's expensive. That was up 18% year over year. Now you're down to 476,000. So people will talk about a housing market crash in Boise and certain markets. And there are markets like this where they had they hit a peak, in earlier this year, but a lot of them hit it in 2022, like Boise. Then they started to decline. Like Austin's like this. It's a very similar chart where peaked in 2022, but steadily declined and now, significantly under the peak. So is that a crash? I'd call that a crash. I mean, you went from 476 from 546. I mean, that's a lot, right? I mean, is it 20%? Yeah, it's a little more than 20%. So Boise's an area where prices have declined, but now they're kind of just steady. If you look at it this year, they started the year at 457 and now they're at 476. So it's not crashing anymore. My guess is there were a lot of people selling properties in 2022, basically when interest rates started to go parabolic. A lot of people listed homes. It flooded the housing market with inventory and prices went down because of that. In a lot of areas like Austin, Boise, they went down a lot. All right, so that is Boise, Idaho. Let me check the comments real quick. Oh yeah, I asked John about the taxes and what he plans on doing. Hey John, I'm going to build a single family house to do snowbird and then rent to STR the time I'm not there and reap up the benefits of tax deductions. Good for you. Yeah. I mean, why not, right? If you yeah, I wish you luck. So are you trying to find it? Looks like you're trying to find a deal right now. Yeah, I would think there are opportunities down there. I would think there are. I don't know much about Florida as far as the real estate market, but I know a lot of people that do invest down there. Real estate taxes are about 4,500. Oh, real estate taxes are about average. $4,500 insurance on a new build. Mason Block getting quotes at $1,600 a year. Oh, property tax is $4,500. Insurance on a new build is about $1,600. That's not bad at all. It's only $1,600 for insurance on a new build. That's pretty good. Ah, so you're going to build a house and then do an STR? Cool. Man, I expected insurance to be like $10,000 a year. That's what I thought. I mean, and that's just purely because that's what I'm seeing people post about. Hey, Mrs. Plex, how are you? Thanks for joining. The Traveler. I'm still trying to figure out who can afford these prices. An 8K monthly mortgage, that is crazy. Yeah, no, 8K a month mortgage, like that's no joke, right? Yeah, people do pay it. They pay a lot more than that, I imagine. So who can afford these prices? Well, somebody is. Somebody's buying houses right now. I can tell you where I live, home prices aren't like that. Mortgages are nothing like that. I mean, mortgages where I am, and the people I help buy houses in like the $250,000 price range, the mortgage is like what's under 2,000 a month. So it's nothing like 8,000. It's more of a, I guess you would call it a normal market. But yeah, there are people paying $8,000 a month for a mortgage. That would stress me out. That'd stress me out big time. Thanks for the comment. Oh, okay. Do Davis, Sacramento area. Yeah, let's do that. Let's do Davis, Sacramento. Sacktown. Shout out to Jason Walter. You guys should check out Jason Walter's channel. He's another YouTuber, does a great job analyzing data. Much better than I do. All right. Let's do new listings in Sacramento. And he lives in Sacramento, and he's a realtor in Sacramento. Okay. Sacktown, new listings up 12%, almost 13% year over year. Headed down, but it's seasonality probably. Active listings. Look at active listings kind of following 2022, but they're still up 24% in Sacramento. So a lot more than last year, a lot more actively in inventory than last year. It is heading down. I'm wondering if people are actually buying houses now, pending sales. Where are those? Pending sales up 16%. So more people buying and selling than last year. And Jason's told me, when I've talked to Jason just over email, he's indicated that he has been busy. So that's good. More people buying and selling helps prices, unstick, makes them more fluid. Median sale price in Sacktown. Look at that. $588,000, up 3% year over year. And they peaked again. They're one of the ones that peaked in 2022. 613 grand about is where they peaked at. Now they're at 588,000. So now we've looked at Portland, we've looked at Boise, and we've looked at Sacramento. All of those today where the peak was actually in 2022 or 2023. But then you have like Columbus, again, where we peaked actually in 2024. 588,000 in Sacramento. Sacramento is an expensive area too. It's probably not an $8,000 mortgage though, right? It's probably like a $4,000 mortgage, I'm guessing. Go back to active listings here in Sacramento. 24% more than last year. So you do have more active inventory. I'm wondering how. I don't usually look at this, but sometimes I do. Let's look at median days on market in Sacramento. How long properties are actually taking to sell? 26 days. That's up 4 days year over year. But look at 2022. Look at that. They were at 31 days, a 20-day increase year over year. So in 2022, it was taking a lot longer to sell a home than it is right now. Now it's 26 days. Before, in 2022, 32 days about. So homes are moving faster than they did in 2022. They are slower than 2023, but yeah, every market's different, no doubt. All right. Thanks for that. The Davis, Sacramento area. Check some of these other comments here. New Jersey is not any cheaper, and we have the highest real estate taxes. Understood. Yep. Well, that's good, man. I wish you luck, John. I wish you luck. And maybe you told me up here. Let me check the comments. I want to know about that triplex you own. All you see are YouTubers crying about housing crash in Florida. I agree. But I'm trying to find it. So you know what? Let's do this. Let me look at another area. Let me look at, I don't know. Let me look at Miami. Let's see where this crash is. Let me look at median sale price in Miami. Look at this. Okay, this is Miami. It's not all of Florida. up 14% year over year. And look at it, it's going straight up that way. $579,000. This is an all-time high. Unless I'm not looking at this data right. Yeah, 562. Yeah, incredible. Look at that. 560,000. Now 579. $579,000. I agree. Let's try another one. Where else should I go? Let me try another Florida area. Let's do Orlando. Try to find where home prices are crashing in Florida. Let's dispel a YouTube myth, or maybe confirm it. Okay, so Orlando, Florida, not crashing. They're not at an all-time high, I don't think. 414 grand, it looks like they hit. Now they're at 406, but it's not a crash by any means, and they're not even under last year. Okay. Now let's do where should we go next? Fort Lauderdale? Fort Lauderdale, Florida? I mean, peaked at 476, or I'm sorry, 475 in Fort Lauderdale this year. 10% growth year over year. Now, 460 grand. Still up 9% year over year. What gives? What am I missing? Somebody tell me. Like, okay, give me another area. Where else should we go in Florida? That's West and Upper Florida. Fort Lauderdale and Miami are skyrocketing. What do you mean that's West and Upper Florida? Jacksonville. I'm looking for an area. Hey, Christopher, what's up? Sorry. Hey, Christopher, what's up? That's West and Upper Florida. Fort Lauderdale and Miami are skyrocketing. Yeah, so I'm just trying to find an area of Florida that is crashing. So John suggested Jacksonville. I mean, up 2% in Jacksonville, $381,000. They peaked this year, it looks like, at 388. But now it's going back up right now. It's not even under last year. Give me another metro to analyze. And let's look at, okay, I just did Orlando. Orlando's not crashing. Tampa. All right, I'll try Tampa. Again, I guess this is all because I keep hearing, and John brought this up, is I keep hearing people on YouTube mention Florida's crashing. Florida's crashing. Like doom. Like we're done for. So now I'm just trying to find where it's crashing. Okay, well, here's an area that it's actually down year over year. So Tampa peaked at $396,000. Now, 375,000. It's down 1% year over year. Crash Bros can't break out the champagne yet. Down 1% year over year. It's not a huge crash. I mean, I'm looking for like cataclysmic crashes, right? That's what everybody says is happening. Fort Myers. Let me do that one. Okay, Fort Myers. Let's try that one. It must be in a different. It must be in a. Must be lumped into another metro. I'm guessing. Yeah, because it's not coming up. It's not going to. Nope. Oops. Nope. It's not. No. Gulf cities in Florida are more. Gulf cities in Florida are more affected due to the storms and high insurance rates. That's true. Yeah. Yeah, I'm surprised. I'm surprised there's not more areas in Florida that are like horrible. Here, let's do this. Let's do this thing. This is now this is Zillow data. This isn't Redfin data, but since you all are playing along, we want to see what's going on. Let's zoom into Florida here. By the way, if you don't already know, this data I'm looking at right now and this map is from Lance Lambert at Resi Club Analytics. Fantastic information. This particular map is a paid map or paid article, but he has a lot of free data too. Okay, look at this. Punta Gorda. So according to Zillow data, Punta Gorda is down 7% year over year, down 12% since the peak. Let me do this though. Let me look at it from a that was a metro. This is oops, let me see. Oh, that's metro too. Oh, that's just a 1 month change. That's what Lance did here. Oh, okay. And he has all the other stats. All right. Northport, Sarasota, Florida is down 0.7%. Shift since the peak, down 8.3%. But look at the 5-year change, 58%. So home prices have grown 58% in Northport, Sarasota. Anyway, let's look at Fort Myers. You'd asked about that, I believe. Christopher, I think you asked about that. Month over month change in Cape Coral, Fort Myers, 0.7%. Month over month. Shift since the peak, down 8.4%. 1 year change, down 5.5%. So yeah, they're down big time. But look at the 5-year increase, 58.9. It needs to fall a lot for it to like be anywhere close to where it was back, 4 or 5 years ago. Huh. Okay. So there's some areas there. So look at Miami. They're saying it's down month over month, 0.4%. Year over year, 2.3. I think that's right where Redfin showed it. Look at the 5-year price change in Miami, up 64% in 5 years. That's insane. 64%. Wow. Wow, wow, wow. Nuts. Punta Gorda is close to Fort Myers. Okay. There you go. So there is some pain there. There's no doubt. Definitely pain. And if you zoom out on this map, you can actually, the red, the darker the red, the more the drop. Kind of the orange or whatever. Yellow is more positive growth. But like Newark, New Jersey, but it encompasses all of New York, all of New Jersey City. So it's kind of a big area. They're down, they're up 9.2% since the peak. 1 year change, 7%. Growth in home prices. 2-year change, 11%. 5-year change, 35%. So the growth in New Jersey, John, is nowhere close to where it is in Miami as far as the last 5 years. On a macro level, obviously way different in the individual burbs and streets and neighborhoods. But yeah, there was only a growth of 35.6%, which is like what, 7 in the last 5 years, 7% a year. So kind of normal or getting close to normal versus Miami where it's 63.8%. I mean, that's approaching what? I mean, 9% a year? Nuts. No, it's over 10%. Over 10% a year. Wow. That's definitely not sustainable. Okay, we can click on this map all day long if we wanted, I guess. All right. Hey, thanks so much for joining me today. Unless you have another metro, and if you do, scream it out. I'll definitely analyze it. Give you a couple more minutes. But one thing to pay attention to is what to do in your local housing market now. Like I've given, we've kind of gone through a bunch of this stuff. right? A bunch of these data sets and cities and everything. And they're like, man, that's a lot of data, Jason. What the heck do I do with all that? Well, just get hyper local into your area to find out and track several key data sets. One of them is new listings and active listings. So track those. And you can do that on Zillow. You can with a realtor and have them send you all the new listings, and then have them send you all the active listings and just count them. How many new listings came in this week? How many active listings are there right now? How many sold listings are there? And just track it. You can use a pad and a pen if you wanted to. You can use a spreadsheet, whatever you want to do there. And also look at days on market. What's the median days on market for what you want to buy in the neighborhood you want to buy? And then just track it on a daily, weekly, monthly basis, whatever you want. And over time, you'll develop a trend of what a good deal looks like. Because you'll say, oh, I know that new listings are increasing. We're adding more inventory. Then you see a new listing hit the market and you see that it's been on, and then you keep tracking it and you see that it goes days on market past the median days on market for your area. So the median days on market's 20 days, and you see something that sits on the market for 30 days, that'd be one to maybe give them a call, find out what's happening. Can you make an offer lower than asking? Probably can, right? And don't be afraid to write a disrespectful offer. You got to do that. You got to do that to make things work. And, don't, you're not going to offend anybody. You're not going to go to jail for making a low offer. And if you have a realtor who's not willing to write a low offer, you may want to find a new realtor, because at the end of the day, a realtor works for you. And really you're the boss in the relationship. As long as you don't tell them to do anything illegal or unethical, they really have to listen to what you want to do. That's just kind of the way it is. I had somebody recently ask me, hey, my realtor won't make a low offer because they're afraid that it's going to hurt their reputation. Most realtors I know, including me, we don't care what the other realtors like. We don't look at it like that. Like if we know that a realtor is working for a client and it's their job to get the client the best deal, just like it's the realtor's job to get the seller the highest price possible. That's how it is. So I never begrudge a fellow realtor for working for their client. I don't care what the offer looks like. And so you have to kind of take the emotion out of it and just make it happen. So anyway, listen, thanks for joining me on this Redfin update. A lot of data. Is the housing market invincible? Probably not. But man, it sure seems that way. It sure seems that way. So I will do this again this week on Thursday. I'll see you then, and I'll see you probably on another live I do tomorrow and Wednesday. Have a great day. I'm out.